Hello, StarkNet family. Welcome back to the Star Cafe. I'm Nurstar, your personal Star barista. And once again, we are ready to serve you with some very special StarkNet content. So, my fam, thank you so much for being here. The Star Cafe is back after a short break. And to resume our activities in the best way possible, today we have the chance to host Moody, the founder of the Ekubo AMM, one of the most interesting and successful StarkNet projects of the last few months. So, without much further ado, let's welcome Moody to the Star Cafe. Hello, sir. Welcome to the Star Cafe. How are you?
Thanks for having me. I'm good. How are you?
Yeah, I'm very well, thanks. Actually, I can hear you very well right now. And well, first of all, also happy month anniversary to the Ekubo mainnet, as the Ekubo mainnet was launched exactly 1 month ago, if I remember well. So, I mean, you've been having a great success and a lot of positive feedback. So, congratulations for that. And yeah, it's a pleasure to have you here.
Thank you. It's been exciting. It's been very fun. Integration. And,
Very well. Okay. The I don't know if the listeners can listen to you, but regarding myself, I can listen you properly. I would say let's give it a try. And yeah, as many of you know, Moody is one of the most experienced builders when it comes to DEX and AMMs. Seeing that he also used to work for on the Uniswap protocol for the past few years, and over there he played a pivotal role in shipping Uniswap V3 and V4 as their Solidity dev lead. But I'm sure Moody will also have other interesting stories about his own Web3 journey. So, yeah, let's start with a very short icebreaker about your background and your experiences in the space, and also in working on such a legendary protocol like Uniswap. Yeah, so tell us a bit
yeah,
more about yourself.
yeah, for sure. Um, yeah, I guess to start, um, I would say I'm a self-taught software engineer. Um, I started with like an integrated science degree at Northwestern, and that was like a background in physics and math, chemistry. But I enjoy programming and building computers as a kid. So I, I taught myself software engineering after college. I worked with some startups. And I found Ethereum around like 2017, 2018, when I was working at a startup as a software engineer, managing all the infrastructure. And so Ethereum really clicked with me. It was like the idea of an unstoppable application that seemed novel to me. I never heard of it before. Um, so I uh, started reading white paper. I actually 2018, 2019, and I can to like before the trade. And uh, and
I'm sorry to interrupt you, Moody. I can't listen to you at all. So let's try some troubleshooting.
okay,
And yeah, maybe let's try like at the beginning when you had some background noise, but actually your voice was better. I mean, I could listen to you.
okay. Let me try changing that. Can
Okay.
you hear me better now?
I can hear you better with the background noise, but yeah, at least I can understand what you're saying. So sorry to interrupt you.
Yeah,
Let's try going on.
yeah. Sorry about that. Like I said, I got kicked out of my office, but I don't know. Maybe you can cut it in post. Um, yeah, so I'm a self-taught software engineer. Um, I have a background in physics, math, and chemistry from college. It was like a sort of like a low level bachelor's in each of those subjects. But then after school, I taught myself how to program, and then I found Ethereum back in like 2018, um, and went to some hackathons. I thought it was a very novel technology, a novel concept, um, and the idea of an unstoppable application. So I started going to hackathons. Um, but there wasn't really any good opportunities back then, like in 17 and 18. It was mostly like ICOs. Um, so eventually, I wanted some like big tech experience on my resume. So I worked at AWS. I was the first engineer on the managed blockchain team, which is sort of like RDS for Ethereum and Hyperledger. And then I worked at Google for a couple of years. And while I was at Google, I actually invited Hayden to come talk at Google about Uniswap, and never got him to do that. But I met him at a tweet up in New York and sort of forced my way into the interview. Um, and yeah, I spent 3 years at Uniswap building. Yeah, I did a lot of front end work, a lot of back end work, some standards work. Most recently, some of the V4 design, as well as this EIP 1153. I spent a lot of time pushing for, which enabled the V4 design. Um, yeah, that's my background.
Fair enough, Moody. Thanks a lot for sharing such an inspiring background. And well, also, I would love to know, when did you decide that it was time to build Ekubo? And also, why did you choose Darknet over other L2s? And also, related to that, it would be nice to know what you thought, what were your first impressions about the Cairo programming language, seeing that you're a Solidity expert. So yeah, it would be nice to know how you came into, how you ran into Starknet, and also what were your first impressions about the Cairo programming language.
Yeah, so I actually was following back since around like 2021. At the time, uh, it was Cairo Zero, and I think Nethermind was working on Warp to port over uh, the Uniswap code, Uniswap v3 in particular, um, and um, and so I've been following it for a while, and it caught my interest that like they were doing things differently, like they weren't focusing on EVM compatibility, and they're more focused on like throughputs. And to me, like that was more of a long-term vision for a layer two. Was if it's about scalability, end user experience, like let's build it from the ground up for those things. Um, but the problem was that Cairo Zero, I literally couldn't grasp it. Like I went to a workshop and I couldn't understand, things like alloc locals and temp bar and like why there are all these different kinds of variables. Um, and then, probably about midway through this year, I gave it another shot. I went to a base camp and I did the exercises for Cairo Zero, but then I started learning Cairo One, and it really clicked for me that I could actually build something on this. And I was doing the base camp around when I was an advisor at Uniswap, and to me, it seemed like a real opportunity to like do something new and innovative, and I think what really drew it to me is that it's something that people actually want. Um, I know people who want an AMM, an efficient AMM on Starknet, and it's opportunity to really own that sort of experience, and make a lot of different design decisions about the protocol that maybe I couldn't make before because it's more of a group decision at a bigger company. Um, and it's really hard to make risky decisions when you're dealing with a bigger company. That's why I think a lot of innovation comes out of startups. But yeah, it's a fun opportunity to take a lot of risks and build a new AMM with different features and designs um, that maybe you couldn't do elsewhere.
Absolutely, yeah. It's also nice also to put into practice all your knowledge on your own project, I suppose. And yeah, it's also great that you also decided to give Cairo a second chance. As you said, you were a bit put off by Cairo Zero at the beginning, and here we have you now, like building this amazing protocol. And before going deeper into Ekubo, I would love to know how, like such an experienced AMM builder like you would elevate the concept of AMM to people who are still moving their first steps in the DeFi world. And it would also be great to know the main differences between the different versions of AMMs in relation to the Uniswap standards, right? Because we are used to this kind of V3, V4, V2. So could you just spend a couple of phrases on this kind of topic,
Yeah,
please?
absolutely. Um, so AMM stands for Automated Market Makers. So I think to understand that, you first have to understand what a market maker is. Um, so when I explain this to people, I usually refer to like the current currency exchange in the airport, where you can, so you're a U.S. citizen visiting Europe, you can trade your U.S. dollars for euros and vice versa. So that currency exchange will always buy your U.S. dollars low, and like they'll sell them to you high, and they make money off of the spread, right? That's the spread is the difference between the price they'll pay you for your U.S. dollars, and the difference they'll pay you for your euros, right? So they'll make a little bit of money off of that, and so an automated market maker sort of lets you be that currency exchange. Uh, but instead of like you sitting at the kiosk and trading with each individual, you sort of just specify your parameters for buying and selling a pair of cryptocurrencies uh, rather than actual uh, fiat currencies. Um, as of today, I mean, there's stable coins, but but yeah, we're talking about cryptocurrencies specifically, tokens. Um, and so yeah, each of the Uniswap versions just lets you be more expressive with the set of parameters you can specify uh, for this like market making position. And in general, as the versions go up, you can be more and more capital efficient. So on Uniswap V1, you could only pair ETH with tokens, which isn't very expressive. You don't get to choose what tokens you're holding in your inventory. V2 added arbitrary pairing, but when you provide liquidity, you still have to be willing to buy and sell it at any price. So let's say US dollars are now worth 100 euros, you're still buying and selling at that price, which maybe isn't a good idea. Um, and then V3 adds the ability to specify the price range in which you want to provide liquidity. So you could say, I want to buy and sell US dollar coin and ETH between the price of 1400 and 1600. And so that means you don't have to provide capital for market making outside of that price range, which lets you be more capital efficient. And then finally, V4 really lets you do whatever you want by allowing you programmability. So you can write a hook for Uniswap V4, which gets called into before each swap and position update, and then you can do whatever you want there, as long as you obey sort of the rules of Uniswap, which is the constant product formula. Um, so yeah, it's like, and then I guess just to say one more thing, Ekubo is like a V4 plus level of expressivity, I would say, with like super concentrated liquidity, meaning ticks in Ekubo are 100 times smaller than Uniswap V3 and V4, which is enabled because of Starknet scalability. But that just gives you a little bit more expressiveness.
I see. Yeah, thanks a lot for such a very clear explanation about the concept of AMMs, and also about the definition of Ekubo in this kind of V version framework. So you said that it's a sort of V4 evolution, if we could frame it into a word. And yeah, speaking about Ekubo more in the details, I would love like to explore a bit more about its most characteristic feature, which is concentrated liquidity. So, Moody, go wild in explaining how Ekubo works in practice, the role of the famous singleton contract, its extensions, and how do you concentrate and manage liquidity on Ekubo?
Yeah, so concentrated liquidity refers to this thing I was talking about earlier, where you can specify the price range in which you provide your capital and do your market making. So, for example, like say you're talking about some US dollar stablecoin and some euro stablecoin, you could say you only want to provide liquidity for US dollars and euros, in between the price of 1.01 and 1.05. So like some very tight price range. And what that means is you don't when the price goes below 1.01 or above 1.05, you're no longer providing active liquidity. Your position is no longer active, which means you're not earning fees, uh, which which is bad. But that means that you don't have to provide that capital, right? So what you can do with that capital is you could say deposit into some yield bearing protocol, like a lending protocol like zkLend, um, or the other thing, the more common thing is that people just provide that same capital in that price range, and so they're effectively leveraged up. And what that means is when the price goes to 101 or 105, they're entirely in one token or the other. And a good way to think about it is you're in the token that's like less valuable. So if USD euro, let's say you're saying €1 is worth 105 USD, then the price of the pool would be 105, and you would be entirely in USD because you sold all your euros. And so if the price of euro keeps going up, then all you have is USD, and so you're missing out on the increased price of euro, right? So the same is true on the opposite side, except with euros. If the price keeps going down, then you're stuck with euros, which are becoming less and less valuable. So yeah, that's what gives you the capital efficiency for the most part. Is this like is being able to choose this like tighter price range and then just adding more liquidity to earn more fees. And the nice on the other side, what the traders get is when they trade against your pool with concentrated liquidity, they move the price less because the liquidity is higher, and so they get better pricing. And that's the main thing that allows Ekubo to beat out all the current V2 style AMMs that are on Starknet. And beyond that, there's some other features like singleton and extensions. I think singleton is coming soon on some aggregators, but singleton just makes it even more gas cheap to trade on Ekubo, which means it'll win more small trades. And then extensions will create new kinds of orders, which is a very deep topic. Not just new kinds of orders, but that's the main thing in the near future. But yeah, maybe I'll save that for later.
Okay, all right. Yeah, very well, Moody. And I also have like a kind of stupid question. When you provide liquidity on Ekubo, do you also get that kind of NFT that you will get on Uniswap? That's that testifies that you deployed liquidity on Uniswap, or it is not available yet, or you're thinking about providing something like that?
Yeah, so this is a very common question. So I wouldn't call it a stupid question. It's a common misunderstanding. I think most people are used to NFTs being some sort of like art or like attestation that they were there, they were involved in something. But NFTs is just sort of like a standard, and so an NFT could be anything. It could be like the deed to a house one day could be an NFT, or represented by an NFT, which means if you transfer the NFT, you no longer have the deed to your house. And the same thing is true with Ekubo positions. If you transfer the NFT, which you get that represents your position, then you lose the position. You no longer have the money that you deposited in Ekubo. So it's very important not that you don't sell that NFT. The NFT serves a real purpose, which is that you can transfer your position, which means if I create my Ekubo position in Bravos and I decide I actually like Argent Wallet or vice versa, I can transfer my position from one wallet to another without withdrawing and then depositing again.
I see, Moody. Thanks a lot. And before continuing with the next question, I would love to thank all the audience for being here. Hey, everybody. Yeah, hello, Tomuk, Kermo, Tekak. Venesoft, Luis, Kodawari, Hendrik, Sergio, C, Harris, Indiv, Kenneth, Cash, Martian, Orange, and Gentlemen. Thanks a lot for showing up at the Star Cafe. I hope you're enjoying our session so far. And for your own interest, seeing that obviously Ekubo is has a very like complex infrastructure, and we won't be able to explain all the details in this podcast. However, I posted a lot of resources about Ekubo in the comment section below, such as the documentations page from the Ekubo website. Then you'll also find a very good thread about the deployment of Ekubo on the Starknet mainnet, followed also by a very good thread by Starknet Digger about the amazing performances that Ekubo has been having for the first during the first month of its life. Then there's also like for the Portuguese speaking friends, there's a very good thread made by Fabio Catalao. And last but not least, I also posted the proposal by Moody to the Uniswap Foundation regarding a proposal that we'll be speaking about very shortly. So have a look at the comment section and learn more about Ekubo. And yeah, and there's also a link to the Ekubo's Discord posted by our friend Hendrik. Thanks a lot for that. And yeah, having said that, Moody, let's continue with our interview. And let's speak about this proposal that you submitted last Friday on the Uniswap DAO forum. And this proposal basically consists in offering a 20% share of a future Ekubo governance token to the Uniswap DAO in exchange for $12 million in Uni tokens. So my question is pretty simple. How did you come up with this proposal and what's its goal?
Yeah, so I think when I started Ekubo, I sort of have always been thinking about how my work at Ekubo could be an extension of the work I did at Uniswap. I like Uniswap. It's the only, or it's the biggest innovator, I would say, in DeFi and AMMs, and they take ideas and they actually implement them and put them into production. And so I think they're like one of the core builders of the space. Um, and so I have a lot of respect for the team, and I was thinking about how my work at Ekubo could sort of be an extension, and how I could also benefit from that community of builders. Um, and um, and yeah, so like I guess one question would be like, why didn't I just do my work at Uniswap Labs? Like, why didn't I just build Ekubo as Uniswap on Starknet? I think you know one of the biggest problems is that there's no way to motivate an employee of a big company to build something like Ekubo. It's high risk, it's high reward. You could spend all your time building it. Like it was a real grind for 4 months just to get to production. It could fail, resulting in you're wasting your time, um, and, and I guess just not getting promoted. So there's not a lot of risk to failing for the individual. But like if it succeeds, the upside is limited. So at most you get like a promotion or two. It's not the kind of reward curve that motivates someone to learn a whole new tech stack and really put their all their energy and love into like building something really interesting or new, because it's a real grind. Um, so I think you need to have that upside for the builders, and working at a big company like Uniswap when I left was over 100 people, or almost 100 people, and then Google. Obviously, I have some experience working at Google and AWS. Like, I think it's really hard to find um, the motivation to take a big risk like that. And then the company itself is not always motivated to to take a risk. Like Starknet is very small relative to Optimism uh, and Arbitrum. So it has to be sort of like a principled and like strong opinion, which may or may not be right, but like it's a big bet and a big investment. Uh, and for individuals who are willing to put in the time and the grind, what they're losing is their time and maybe a few months' salary if it doesn't work out. So I think, but if a company does it, then it's like more of an investment. They have to, very high bar, like UX. They have to assign a lot of people to the effort. So yeah, it's like I think it's sort of to me, Ekubo and with this proposal is sort of the optimal way for the Uniswap DAO to like to spread its wings and like to grow, its offerings and continue to innovate. It needs to like start acting just a little bit like a VC and investing in interesting projects which are synergistic or aligned, so that it can uh, both grow its offerings and then also benefit from that innovation. Um,
Yeah,
yeah,
that's great, Moody. Yeah, it also seems like that this kind of proposal also comes out of gratitude, right, for your time at Uniswap, and it's always beautiful to see when a former employee also thinks about a possibility that not only could benefit in this case like Ekubo, but also the Uniswap DAO, the Uniswap community. And yeah, it would be interesting to see how the Uniswap DAO will respond to this proposal, and hopefully it will be voted for. And this could also allow Uniswap to diversify a bit, as you were saying, to act also as a venture fund, and to get exposure on other protocols without having to deploy Uniswap directly. And regarding this proposal, obviously, the following question, I'm sure that while you were writing your proposal, you were already thinking about how to answer to these kind of questions, like the one that I'm about to ask you for, which is like, do you think that this operation could have like some risks? Because in the end, a 20% of the governance token given to another DAO is not a small amount, especially if we think that during the previous bull market and the current bear, one of the most noticed flaws of DAOs was the inability to maintain the value of their treasury, due to either having the treasury composed of their own token only, or having the treasury too diversified in several different tokens that together with their own ones would lose most of its value, and at least temporarily. So seeing that Uniswap's DAO follow the strategy to be very uni maximalist, so of having only the uni token in their own treasury, when it comes to like to treasury management, don't you think that if this proposal gets through, this share of Ekubo tokens could be facing the risk of being sold quite easily during turbulent times?
yeah. I think there's like a few parts to that question. Like I guess as far as like treasury management strategy, like it doesn't seem like um, there's any strategy at all today. I don't know what the foundation is doing in terms of like fixing that problem. I think it is a problem that the DAO has only uni tokens and nothing else. I don't know if I see Ekubo tokens as a diversification. It's a very similar product, which is just on a different chain. Um, I think it's a diversification in terms of the L2 risk. Let's say Starknet really takes off, um, then which we're going to do our best to make that happen. Um, then Uniswap is going to need a foothold on Starknet to stay relevant. Um, and I think there's a real risk of one layer two just eventually soaking up all the volume, like effectively winning the LP wars, and I think Starknet is in a decent position to do that in the long term. And so yeah, I think you know, it's not necessarily diversification, although EkuboProtocol does currently earn revenue, and that revenue is in every token like it's deposited. So in that regard, it does diversify a little bit. And as far as like if the DAO just like sells or distributes the Ekubo tokens, like I think that's totally fair. You know, it's to me it's like a distribution to the Uniswap community, and it's up to the community to do whatever they want with it. You know, I'm not really worried about like the Ekubo token price. I think everyone should be afforded the opportunity to get involved with Ekubo. I think the market will decide what is the fair value of this thing that I'm building. We're building the Ekubo Inc. And you know, I'm particularly. I think I would much rather the DAO distribute and then all the holders dump Ekubo than like make a deal with a particular VC and then the VC dumps. I think it's a lot more fair to the community um, and the ecosystem if everyone has a fair chance to participate in Ekubo protocol.
Yeah, I agree with you, and I also wondering. I mean, in case there would be some intention to sell these tokens, or at least a part of this token, I suppose that there would be a voting process, right? What do you think?
Yeah, for sure. They would have to. There would be a lot of operational overhead. Like I think probably um, the foundation or someone who represents the DAO would have to deal with distributing it or selling it. It's a good effort to execute it.
I see, I see. Very, very good. So as we transition towards the end of this Star Cafe, yeah, we would love to know what we can expect in the coming months from Ekubo regarding protocol developments. Do you also plan to implement a native swap interface, or you really like the privilege of outsourcing this task to aggregators such as Avenue and Fibrous? And maybe you can also elaborate on the reason why you don't have a swap interface for the time being. So yeah, we'd like to know a bit, some spoilers about the future of Ekubo.
Yeah, I think like at a high level, you know, the way I'm thinking about building Ekubo Inc. is uh, like I I sort of want Ekubo Inc. to be a developer or contributor to Ekubo protocol that sustains itself from its own shares, whatever they are, whatever the distribution is of Ekubo tokens. And so I want the Ekubo protocol to be sustainable in terms of giving, uh, you know, giving back revenue to, in some way, uh, distributing revenue to holders. And I want the company to be one of the holders um, where it's sustained by the revenue from its share of those tokens. And so I think there's a ton of work around building that. And, you know, in addition, I have code complete limit order extension, which I'm debating just releasing open source. And what that does is it allows you to create a limit order and I have a little interface for doing that internally. It lets you create a limit order, which is another kind of liquidity um, in the Ekubo interface. And once that position is executed, you can withdraw the tokens, and no one can unexecute it, unlike regular Ekubo positions. That one is a little bit blocked because I'm concerned about aggregator routing. Um, it sort of requires really low latency infrastructure. So I'm holding off on deploying that. Um, and yeah, I think for the most part, um, we'll be spending our time working on uh, really just growing the StarkNet ecosystem. So that means making incentivization feasible, maybe doing some of that ourselves. Um, but like the product works, it's deployed. You know, we need to get security audits, and then we need to grow the Starknet ecosystem, and so those are a couple of the short-term priorities. And yeah, you also asked about you know, our choice to use to rely solely on aggregators. So to me, the routing is like something that one team will never get perfectly right, especially with extensions. And so the idea of pursuing it and spending Ekubo resources on pursuing it, when it'll never be good and probably never be as good as any of the aggregators that are focused on this effort, just seems a little bit wasteful and maybe not the best thing for the user, because we want the user to get the best price. So if that's not Ekubo, they should be routed to Ekubo, and that's sort of the principal idea of letting aggregators take the wheel.
Yeah, that makes a lot of sense. And you basically answered to the question from somebody from the audience, from a gentleman who asked how limit orders will be implemented. But I think he already got his answer. I don't know if you want to elaborate further on that, but I don't know if it's needed. What do you think?
Yeah, it's a pretty complicated extension actually. It took me quite a while, but basically, um, what happens is when you we keep count of how many ticks a particular pool has crossed initialized ticks, and when you create a position, we record that on the tick where the position is, and then when a user swaps, we whenever they cross an initialized tick, we update the initialized tick that they crossed, and then we would pull the liquidity. So it's very complicated, and it's much easier to understand if you're reading the code, I think. But I mean, even then, it's not that simple. But yeah, I think that's why it's a fun extension to open source, because it sort of demonstrates the power of it, but also like how, you know, maybe some of the complexity of it as well.
Very good, Moody. Well, we've come to the end of this Star Cafe, and we learned a lot of very interesting things about the Ekubo AMM and its concentrated liquidity. We had a very concentrated episode, and Moody explained a lot of things to us. And as I said, you will find additional resources in the comment section. And once again, first of all, I would love to thank each one of you for coming to the Star Cafe, taking some of your very precious time to be with us and enjoying a virtual coffee with us all. And secondly, I would love to thank Moody for being here. Thanks a lot for explaining Ekubo. Looking forward to having you back at the Star Cafe.
Yeah, thank you so much for setting these up. Pretty cool.
Thanks a lot, Moody. Well, guys, it's time to close. Remember to share the Starknet vibe and see you next time. Bye, guys. Take care. See you, Moody. Thanks a lot. Bye-bye. Bye. Take care. Bye, guys. Bye, Wara. Bye, Tekak. Bye, Luis. Bye, Kodawari. Bye, Hendrit. Bye, C. Bye, Venesoft. Bye, Harris. Bye, Indiv. Bye, Cash. Bye, Anna Maria. Bye, Martian. Horridge. Gentlemen. See you next time, guys. Take care.